Hello, everyone. Thank you for taking the time to listen. My name is Molly O'Neill, and I'm covering international consumer discretionary. I want to begin by reviewing my screening process. The California fires had just started the week I began screening, so I was looking for a company with a strong ESG strategy. One such company with a higher ESG rating than all its peers is Danone. With that being said, today I will be presenting Danone ADR, ticker DANOY, a leading global food and beverage company. Danone still trades on the lower end of its 52-week range, despite a bit of rally in the market. I will outline the company's most important qualities and details of why I believe the stock is attractive today. Danone manufactures and distributes nutrition-focused food and beverages through a portfolio of well-recognized brands. The company operates through three business segments: essential dairy and plant-based foods, which made up for 52% of revenues in fiscal year 2019, 30% from specialized nutrition, which includes early life nutrition such as baby formulas, and advanced medical purpose nutrition, and 18% from its water segment. Danone benefits from global coverage and strong presence in developed countries, with just under 55% of revenues generating in developed countries and 38% of revenues from emerging markets. By country, the United States generates the majority of its revenues at 21.5%, followed by China making up about 10% of revenue. And then following that is France, Indonesia, and then other European countries driving the remaining revenues. The company was founded in 1919 and is headquartered in Paris, France. Danone is a market leader through its well-diversified brands, which includes Danone Yogurt, Silk, Stock Coffee, Active Yogurt, Aptil, Baby Formula, and more. Danone can also be found in over 120 countries. Danone holds the number 1 market share in essential dairy and plant-based foods and number 2 in early life nutrition. Moreover, Danone is the second largest health and wellness food companies, right behind Nestle. It's projected that the health and wellness food market is going to increase at a 8% CAGR, maturing to $235 billion by 2025. This growth is driven by the change in consumer demands for eco-friendly products and healthier eating habits. Danone recognized this trend early on and implemented a new company vision in 2017, One Planet, One Health. The firm focus has moved to incorporating sustainability into their business strategy. Danone plans to accomplish this goal through their commitment to innovation and creating products that give meaning to their customers. One trend is producing environmentally cautious products. Danone has capitalized this through all three business segments. Likewise, Danone has been investing in AI technology to better understand nutritional needs and real-time product information. In addition to environmentally safe products and innovation, Danone's food and beverages are produced to meet the health needs of consumers. After growing revenues steadily at a 3% CAGR over the past 5 years, the introduction of new sustainable-driven strategy, commitment to innovation, and nutrition-focused products will lead to an increased revenue of 3.5% to 4% by fiscal year 2024. With that being said, it is recommended that Danone be added to the AIM International Fund with a price target of $88.60, representing a 32.06% upside. The first driver is the emphasis on ESG Danone puts into their business strategy. Danone is catering towards eco-conscious customers, and it shows through their product lines, backed by their ESG rating being a AAA. It's also important to note that Danone was the first French-listed company on the Société Émission under Loi Pacte, which is a French law that encourages companies to define long-term sustainability goals. By 2025, Danone has implemented a plan to reduce their carbon usage to zero. In efforts to begin implementing the plan, they created a new baby formula factory in the Netherlands. This decreases the specialized nutrition segment carbon usage by 50%. This January, Danone launched their oat-based product line, which grew EDP sales to 4.6% in quarter one, compared to 0.2% the year before. Management has disclosed that plant-based sales will grow at a CAGR of 7% year over year and reach $5.4 billion by 2025. Danone has also implemented a plan by 2025 to have all water bottles and jugs be 100% recyclable. Now moving on to my second driver. Danone gains competitive advantage from its dedication to innovation. Danone just launched the first ever digitally enabled baby formula tracker in China this year. Track and Connect allows customers to scan the barcode on the back of baby formula. Consumers will then receive real-time information about when and where it was packaged and all the ingredients involved in the formula. In turn, early life nutrition sales in China grew 6.6% and 7.6% in overall specialized nutrition sales. Although quarter two specialized nutrition sales were offset by the border closure in Hong Kong to China, management still sees long-term growth in China and announced investment of $118 million to a new research facility in Shanghai. This is dedicated to growing the specialized nutrition market in China. Track and Connect will also be launching later in France, Germany, Australia, and New Zealand. Finally, during the global shutdown, people turned to binge-watching TV and eating comfort foods. This led people to gain what is known as the Quarantine 15. Nutritionists across the globe have expressed their concerns regarding the connection between obesity and a poor immunity. Recently, there has been a shift from the Quarantine 15 to a healthy lifestyle to try and combat with COVID-19. Although, according to the CDC, there is no proof that eating healthy can prevent COVID-19, they did disclose adding probiotics and vitamins to diets can improve immunity. Moreover, that the best way to get vitamins and probiotics isn't through supplements, it's through nutrient-rich foods. Recently, 75% of consumers say they want to eat healthier foods to boost their immunity to try and fight COVID-19. With that being said, with Danone's portfolio of health-focused food and beverages, the company is ready to capitalize on the move to a healthier diet. In order to reach an intrinsic value for Danone, a 5-year DCF model was constructed, using a terminal growth rate of 2% and a WACC of 5.32%. An intrinsic value of $82.51 was reached. A sensitivity analysis of 20 basis points on terminal growth and 50 basis points on WACC ranged from $53.66 to $126.01. Using a PE multiple of 16.9 and intrinsic value of $76.13 was calculated. Furthermore, an EV to EBITDA multiple valuation was conducted using a weighted average of 14.8 times, resulting in a value of $119.33. By weighing the model's 60-20-20, a price target of $88.60 was reached, resulting in a potential upside of 32.06%. Danone also pays a dividend yielding 2.5%. The first risk Danone is faced with is the change in consumer trends. Consumers are always demanding the latest and healthiest options. While Danone's essential dairy and plant-based segment has performed well, the company will have to constantly reinvest in research and development to meet the needs of consumer demands. A second risk that Danone is faced with is with their Latin America and African segments. Just because they were hit really hard by the pandemic with the closure of grocery stores and sanitary regulations that was put onto the supply chain. If there's another global shutdown, the supply chain could be affected once again. The last risk that Danone is faced with is within their water segment. Similarly, the COVID-19 pandemic affected the water business. The dramatic impact was due to the decline in demand for single-serving or on-the-go water bottles, as well as food service closures, which made up 40% of all water sales. Mr. Fabier was appointed CEO of Danone in 2014. Prior to serving as CEO, Mr. Fabier has also been with Danone since 1997 in various roles, which include Vice President of Asia Pacific Region, Deputy General Manager, and Vice Chairman of the Board from 2011 to 2013. Prior to joining, Mr. Fabier worked as a consultant for Bain & Company and an investment banker at Baring Brother. It's also important to note that 44% of all board members are women, including Cecile Cabanis, who has served as CFO since 2017. Mr. Fabier plans to add a missions team who will oversee Danone's ESG strategy and Societe à Mission. Mr. Fabier and the rest of the management team have extensive experience in global branding business and leading multinational organizations.